When you were talking about all the different ways that they can hit this 25% bogey, the one thing that I wanted you to say and that we're going to talk about is they could also go out the risk curve and start dealing with customers who are riskier than others. Because to me, that's where Trump enters the picture.
Oh, that's exactly where Trump enters the picture. I mean, the relationship between Deutsche Bank and Trump started in 1998, just as the bank was trying to carve out room for itself in the United States market. And basically the way to do that for Deutsche Bank was they needed to find customers that were, for one reason or another, not bankable or not banked by kind of the better established players on Wall Street or in the US market.
And let me just drill down on that for a second, because when you say that they needed to find customers who weren't banked by other banks, why is that? Why couldn't they just go up to offer better rates to great
because
customers?
Offering better rates isn't profitable, right? You want to offer high rates, and you don't want to get into this bidding war with the rest of Wall Street, where they have better relationships, they have deeper kind of rosters of clients, and they have more employees. They have much greater sophistication and much greater reputations. You want clients who basically don't have a choice. You can charge them more, and they'll be really loyal to you. And Trump at this time was just coming off a series of defaults on his Atlantic City casinos, and his companies had declared bankruptcy a number of times, and not surprisingly, those are things that do not make you particularly attractive as a potential borrower for a mainstream bank. And so he was really eager to be shifting his business from being this casino guy to being a big New York real estate developer. And to do that, it was absolutely essential that he establish a good relationship with a major bank that would finance what he was hoping was going to be a buying and development spree in Manhattan and elsewhere. And so he meets Deutsche Bank, and it is essentially a match made in heaven. Trump gets what he wants, Deutsche Bank gets what it wants, and off to the races they go.
And so what went wrong with that relationship? When you looked through and uncovered how that relationship formed, I mean, it all seems, he's now the president of the United States. Deutsche Bank was sitting pretty after the financial crisis.
Well, within a couple of years of Deutsche Bank starting to lend hundreds of millions of dollars to Trump, the predictable begins to happen, which is that Trump, as is his wont to do at this point, starts defaulting on debt. And the first time he did this, Deutsche Bank had arranged, I believe it was a $400 million junk bond offer for one of his casino companies. And it was a really hard sell for the Deutsche Bank sales guys who were doing this. They ended up having to really jack up the interest rates on the bonds to find buyers. And Trump actually... This is one of my favorite little tales from this book. And Trump convinces, the sales guys have basically given up. They did a road show with Trump, and there were no buyers for the bonds. And so Trump requests a meeting with the sales team, which he's granted. And he comes in and he says, listen, guys, I know this is not the easiest deal to pull off, but if you can do this deal, if you can sell these 480 million bonds, or whatever it was, you will be, not only will you get paid, but you will be my personal guests for the weekend at Mar-a-Lago. And, talking about incentives, these are bankers and sales guys who are getting paid a lot of money. And yet here's something that money cannot even buy. Being Trump's personal guest, getting flown down there on his 727 and spending the weekend with him was something quite special. And it actually did the trick. And the bankers did the deal. And afterwards, just as an aside, the kind of guy who was running this desk reminded Trump, he said, we pulled this off, now don't forget what you promised my guys. And Trump is like, what did I promise? And he kind of tried to wriggle out of the agreement. He did eventually come through, and he flew everyone down to Mar-a-Lago, and it was a great weekend together. And then a few months later, he defaults. Wow, and so nice. Deutsche Bank, that doesn't cost Deutsche Bank money, but it means that all of the customers to which they had just sold these bonds get screwed. And that is the end of this particular arm of Deutsche Bank doing business with Donald Trump going forward. But it doesn't derail the overall relationship with the bank, because within Deutsche Bank, remember, people are compensated not based on the entire company's performance. They're based on their comp is based on a much narrower band, which is their personal performance or their team's performance. And so this does not change the equation for people, in this case in the commercial real estate business at Deutsche Bank, which are still very eager to strike up a profitable relationship with Trump. And in 2005, they do it once more. They do this $640 million loan to finance the construction of a huge tower in downtown Chicago. And once again, Trump is whining and dining the bankers and showing them a great time, and they do the deal, and everyone's happy for about 2.5 years. And then the financial crisis hits in 2008. And Trump asks for a 6-month extension, which he's granted. And then the final due date comes in November of 2008. And Trump owes a lot of money, including $40 million that he had personally guaranteed. So that was connected to his personal assets. And what does he do? He looks around. Alan Greenspan had just referred to the financial crisis as a credit tsunami. And Trump has his lawyers go through the fine print of the loan documents. And in the loan documents is this kind of very typical provision, an act of God provision, that means that if there's an unanticipated natural disaster or something like a tsunami, for example, it can void aspects of the contract. And so Trump sues Deutsche Bank, claiming that the credit tsunami that Greenspan had just described constitutes a contract voiding act of God. He then sues Deutsche Bank for seeking $3 billion in damages, accusing Deutsche Bank of having caused the financial crisis and of having engaged in predatory lending practices against him, Donald Trump, by trying to collect on the loan that he owed them. And so once again, we have an arm of Deutsche Bank. In fact, this time it was really the whole bank saying, this is humiliating. We're done with Donald Trump. And eventually the litigation gets settled and Trump agrees that by 2012 or so, he has to repay a substantial portion of what he still owes, including the $40 million that he personally guaranteed. And Trump is once again in a situation where he needs to find another bank if he's going to continue building and buying stuff. And if he's not going to use his own money to repay Deutsche Bank, he needs to find a bank. And no one's going to touch him because he keeps defaulting in a very public way. And what does he do? Well, he goes to a third arm of Deutsche Bank, in this case, the private banking division, and strikes up yet another relationship and gets Deutsche Bank. And this causes.
And what year is this?
This is 2011. And so the private banking division, which is what caters to the richest of the rich, basically, wants to reestablish a relationship with Trump. And this goes up the chain of command of the bank, and a huge fight erupts because the investment banking and the commercial real estate guys and the sales and trading guys are saying, no way can you do this. I mean, and not only don't do it because it's not smart, but this is humiliating for us. Like, we have already been burned by this guy repeatedly at this point. Why on earth would he do this? And the CEO, Joe Ackerman, still finally gets to him and he says, go ahead, do it. And so the first loan that Deutsche Bank does in this new relationship is a $48 million loan to Trump that he uses to repay what he still owed this other arm of Deutsche Bank for the defaulted loan. And that is, I have never seen anything like that. And one arm of the bank giving tens of millions of dollars to a guy who's already defaulted to repay this other arm of the bank. That is, I mean, most institutions would not. In fact, I think almost any financial institution would not do that in a million years.
Well, let me play devil's advocate here for a second. And what I'm going to say is that maybe this is when you look at deregulation and all these kinds of things, and the fact that Deutsche Bank was trying to get into the U.S. market, this is a microcosm of what was happening in the U.S., that the lax regulatory environment and their need to get customers caused them to do that. That if it were in, say, Germany or the UK, it wouldn't have happened.
I don't know. I mean, I think look, it's certainly true that regulators were nowhere to be seen. I mean, this is Deutsche Bank is a great kind of parable for this epic failure of regulators in the US, in Germany, the UK less so actually, but at least in this particular case. And yeah, this is a peculiarly American saga at this point, because this is a foreign bank trying to make a name for itself with the richest of the American rich in the middle of New York. And people don't know Deutsche Bank's name. They can't even pronounce it. It's like they've really struggled to make a name for themselves. And here comes Donald Trump, the guy who is the star of The Apprentice and is very famous for good reasons and bad. And it's very enticing if you're a foreign bank trying to make a name for yourself and establish yourself in a country like the US to kind of throw caution to the wind. And I think the better argument in Deutsche Bank's defense here is that this last batch of loans that Deutsche Bank did, which went from 2011 through 2015, so leading up to his presidential campaign, was about $350 million of loans over that 4 or 5 year period. And those loans actually were probably not horrible credit risks. Right, and Trump, one of the concessions that Deutsche Bank extracted out of him for these final series of loans was that he had to provide personal guarantees, basically comprising the vast majority of the loans. And so, through a combination of pledging his personal properties as collateral, or just having tens of millions of dollars in wealth management accounts of the bank that were presumably seizable if he were to default on the loans. From a purely credit risk standpoint, these loans were probably pretty safe. And indeed, there's no reason, we don't actually know what their status is today in 2020, but we have no particular reason to think that he hasn't kept up with the payments, other than the fact that that's been a pattern of his, of not keeping up with the payments. But probably from a purely dollars and cents standpoint, those were prudent loans, and they weren't very high interest rates. In fact, they were quite low, but they charged a lot in fees, and Trump had to keep a bunch of money in wealth management accounts at the bank, which also generated fees for the bank. And what that pure dollars and cents calculation does not count for at all are the reputational risks associated with doing business with someone who is, a consistent default risk, and who, at the time these loans were made, was exhibiting some personality traits that frankly were not desirable for other banks. And whether he was engaging in demagoguery, he was accusing Obama at that point of not being American-born and therefore being an illegitimate president. And those were things that other banks, when Trump would come by periodically to see if he could get money, they were aware of the public profile this guy had. And especially after the financial crisis, banks had become much more attuned to the reputational risks associated with doing business with people that were going to be in the headlines for the wrong reasons. And Trump triggered those red flags. But for Deutsche Bank, they were so interested in, they're viewing this, first of all, through an entirely financial prism, not a reputational one at all. And they were really looking at it in the short term, once again. And from a short-term financial perspective, these loans made sense.